Hello,
Okay,
everybody. Welcome to our group. And today our special lesson is tax information for writers. And this is going to be lively. So pop a cork, dance around. And I'm really pleased and happy for Henry's generous offer to join us. And of course, if you like what Henry says, I'm sure he's open to be hired at some point. But well, I'll turn it right on over to Henry.
okay. My name's Henry Eknaian, and I'm with CPA firm Johanna E. Hyam PC. And we're a small CPA firm, but we specialize in small business. We do a lot of commercial. We do individual taxes as well for our commercial clients, but our practice is basically geared towards businesses, small businesses, which, whether each of you know or not, writing a book means you're in a small business. And I'm sure some of you know that, some of you don't. So I would start at the beginning, which is what kind of entity should I set up to manage, to run my business? Here's the options. Sole proprietorship, which basically means you don't set up any kind of partnership or corporation or any of those things. You're a single person, you have no employees. And tax-wise, what happens, we'll get into liability in a minute, but tax-wise, basically it goes on your personal income tax return, whatever revenue you produce, net of your expenses. That income or loss goes on your personal return and what's called a Schedule C. So that's one entity. The next entity, which is one that we prefer, is what's called an LLC. And an LLC there's different kinds. You can have one where there's multiple partners. That's a little more complicated, since I believe most of you are just on your own. You'd have what's called a single member LLC. So how does that work? Basically, well, before I tell you how it works, I would suggest that you do it not for tax purposes, because tax-wise, it's not very different. It's more legal, liability purposes. If you set up an LLC, even a single member LLC, should you ever get sued, your personal assets are protected 99.99% of the time. Tax-wise, it doesn't make too much difference. You set up the entity, Henry Eknaian LLC, you set it up with the IRS, you need an attorney. And although the IRS part really doesn't need an attorney, you can do that on your own. You go to the IRS website. They'll ask you certain questions to make sure you're you, who you are, that type stuff. And they'll ask if you have any employees, which you don't. So you skip over all the more complicated things, and you'll get what's called a tax ID number, which is different than your Social Security number. And with that tax ID number, that is what you want to give to all outsiders on a W-9 when they ask for it. Everybody know what a W-9 is? And if I'm losing you, just speak up. But when you do a W-9, instead of putting your personal Social Security number on there, you put this tax ID for this LLC on there, because that's the business you're operating under. So that helps to a little extent, because your Social Security number isn't out there to the world. But the real advantage of the LLC is more liability wise for, as I said, asset protection. The next choice is if you set up either an S corporation or a C corporation, which I'm not going to spend any time on because I don't think that applies to any of you, but those are other entities that you can set up. If you wanted to pay yourself, for example, you, instead of an LLC where you do not have to pay yourself, you could pay yourself via a payroll service and take paychecks out of the company. It's, without getting into the details, probably doesn't apply. You're better off just with an LLC. But we can get into those if you have those questions. So, okay, now I have a business. So you have a book, you sell it. So what expenses can I deduct? Well, if you're working in a remote office away from your home, then you can deduct the rent and expenses for that office. If you work from home, you can deduct what's called, for the IRS purposes, an office in the home expense. Okay, what's an office in the home expense? I'll make it as uncomplicated as I can. Basically, there's different ways to calculate what that is, but the area you use has to be solely, I'm quoting the IRS now, has to be used solely for your business. So if you're working at your kitchen table, you really can't deduct an office and a home expense. On the other hand, if you're in a room, like the room I'm in, for example, in my home, I have a desk, I work remote, I'm a W-2 employee, that doesn't count, so I wouldn't be able to deduct it anyway, but if I did, I would be able to deduct this room because the primary use is as an office. And okay, so what do I do? Well, basically, there's two ways. You go by square feet of the room, or you go by the number of rooms in the home versus the total number of rooms in the home itself. So then the next thing is, well, what's the count of number of rooms? Usually a local tax assessor will say the number of rooms. It excludes bathrooms, excludes mud rooms, excludes front hallways. Basically, it's the primary room. If you have a 3-bedroom house, there's 3 rooms. You have a living room is 4, dining room is 5, kitchen is 6, 7 is your office. Then you can deduct basically 1/7 of all your home expenses. Everything. Insurance, real estate taxes, interest, general maintenance, everything that you spend on the house, even outdoor maintenance, all that you can deduct 1/7 of it. So it works out pretty good for most clients. Now, if you end up with a loss for the year as a result of the office and the home, you cannot take a loss for your office and the home expenses on your tax return, but it is carried forward. Meaning if the next year you end up with a higher profit, what you didn't take the year before is deducted against that year. So just because you say, gee, I'm not going to show any profit, I don't want to do it, my recommendation is that you post it, put it on your tax return, and in the following year, it'll carry forward for your future income. Now, there's one other item you can deduct, but that's, I think, too little complicated, and that is you can actually deduct depreciation on your home, meaning if you paid, I'm going to use simple numbers, 100,000 for the home, and that's all your expenses, no improvements. I'm just trying to keep it simple. You can deduct that over the estimated life, which is, I can't remember the exact number of years. It's 3% roughly a year. So you could deduct 3,000 a year in depreciation. I'm not a big fan of doing that. It depends on a particular client, because what happens is when you go to sell your home, you have to declare that as income, whatever depreciation you took.
Hey, Henry, real quick, could you
Sure.
first of all, turn on your camera? So
Yeah.
my question is, can you declare 1/7 of your property tax?
Yes. 1/7 of everything. Everything that relates to your home, using my example. My camera isn't on?
No.
It's not on? Oh, boy. Hold on. Is it on now?
Yes.
Okay. So see, I'm in the dark, right?
That's okay. We're all in the dark.
All right. It's because of the sun behind me. But anyway, getting back to your exact question, Tim, all expenses you can deduct 1/7. And I can tell you 9 out of 10 clients, when they give me their expenses, they don't get them all, because pretty much I know what's missing, so I'll ask for more. So you just do your best. All utilities, there's another one, I didn't even mention that. All your utility expenses, 1/7 of that. Anything related to the home. So that's an expense. Why did I start with that? I started with that because that's what most people miss. Other expenses that most people miss are web and email expenses. We had spoken before we started the meeting about what's conducted on the internet. Your expenses for the internet are deductible. It can be a business, personal, that can be an arbitrary thing. If you have to, most houses upgrade, especially if you're working from your home, upgrade their internet because they need the speed. You can deduct the percentage of that. You can deduct your telephone expenses. You can deduct any, if you're paying Zoom, you can deduct that. All those expenses are deductible. And there's a lot of those that people miss because you got Adobe, you've got all the different things that's attached to your computer, which now most companies are doing what I call the monthly pension plan method, which is instead of charging you a flat amount in the beginning, they charge you a little amount per month from now to the end of time. So you get to deduct those monthly expenses on all those things because they relate to your business. Meals you can deduct. And you say meals, what does that mean? Well, meals that relate to your business. And it's and let me just back up for a second, another one of my little philosophies. I'll tell every client before they come in, I want you to report every dollar of income. Do not ever not report all of your income. If your brother-in-law gave you $100 cash for a book, just using your example, report it. Because you never want to be in a position where the IRS catches you not reporting income. On the other hand, when it comes to expenses, there's black, white, and there's gray. The gray stuff you can deduct because you will not get could you get audited? Could the IRS kick some of the expenses out in an audit? Yes, but chances are they won't, as long as they're reasonable. But you will be in deep trouble because years ago, I had a client, he was a plumber, and I got referred by an attorney because the IRS basically caught that he did not report his income, and he happened to work for it. How did they catch him? Well, he worked and I don't want to get into this whole thing too long. He worked for a public housing authority. So they knew exactly what they were paying the guy, but he didn't pick it up on his tax return. So when the IRS suspects, and this is something else a lot of people don't know, if the IRS suspects that you're not reporting income, they have the right to go to a federal court and subpoena the bank to send to them your bank records. And well, what do they want those for? Well, every deposit on your bank records, they'll call you in and they'll say, hey, Henry, on January 11th, 2024, that would only be yesterday, so that doesn't count. Usually it's 3 years out. So January 11th, 2021, you deposited $528 into your bank account. Do you remember what that was? Well, you have to explain to them what it is.
So what are some things that will cause the IRS to raise a red flag or see your red flag?
Well, it has to be, well, in this case, this plumber, for example, it was because he was dealing with an actual governmental agency. But regardless, you don't want to get caught. And once you're caught, you get on a special list and they never let you go. To the rest of your life, your return will be examined. And you don't want to be in that situation. What will trigger it? Who knows? Usually large bank. If you notice, they now require anything over $10,000 to be disclosed. The banks have to tell the government. That's one way. The other area is right now, this time of year is a perfect time of year. You're going to be getting 1099 which MISC, they called 1099 MISC, from different organizations who gave you money. You'll be getting 1099-Ks from Venmo, all the online people. And if you don't report all of those, in other words, let's say you add all those up, the 1099 MISC, the Venmo, go through the whole list, Google Pay, any of them, PayPal, all the different ones. And let's say that adds up to 50,000. Well, the IRS has that record. They have a copy of all this. Meanwhile, they get your tax return and you report 42,000 of income. Well, guess what? There's a computer that'll match those 1099s to your return, and that'll put you in a special pile. So it's always, again, if you do ever get cash for anything, you can, even though they're not reported, it's good to add them in. I have few clients who that happens. Definitely tradespeople, it happens. And that's what.
Leanne has a question.
Go ahead, Leanne.
I just wanted to comment on, since you guys are handling my audit, that I got notified in November. And we don't know exactly, but I have significant payments that have gone to my lawyers, but a lot of them come across as like a Clio payment, such and such payment, and not the law office. And you guys pay attention to that, because a lot of the stuff that you'll start paying out are from smaller businesses, whatever. But for me, they're questioning the exorbitant amount of legal fees. Well, mine are justified, but it looks like I'm a loan shark or I'm laundering money.
Well, that's the outbound. We're still working on the inbound. I'm going to get to the outbound. But but that's a good point. I'm talking more about money coming in, money coming out. We're going to talk about in a minute.
All right,
but
so
in terms of being audited or whatnot, like to disclose, it's like, just pay attention, because my QuickBooks does. And my lawyer, one of my lawyers was upset that he thought his stuff was triggering my audit. I'm like, no, but just so you know, all of these Clio payments or whatever that don't look like they're going to a lawyer is like a red flag to an auditor.
Yeah. So Henry, I also have a separate bank account for all my book stuff. So I get like $17.99 for a book. I'll put it in my wallet, then I'll do a transfer from another account into that separate account. So it's displayed. My question is, that doesn't generate a 1099. So when I get my taxes done, what do I say? Do I just say, hey, I got cash input of $4,000 and that's it?
You add up all those little ones and you tell your accountant, okay, this is what my 1099s say. This is in addition to that.
Okay.
That's how you do it. And like I said, you say, gee, I got to pay extra taxes. Not really, as long as you deduct all your expenses on the other side, you'll more than offset. So, and you'll, at that point, I mean, I've been in audits before. IRS will negotiate on expenses. If you say, gee, you write off 90% of your, let's just use an example of your Verizon Fios bill. And, instead of saying 50-50 business and personal, well, you can negotiate that with the IRS and prove why or not. And they're very flexible on stuff like that. They really are. But they're not flexible when they say, gee, you're not reporting all your income. So that's that particular factoid. And to answer your original question, Tim, and we'll get to outbound in a second, Leanne, but the other way they can so-called catch you is your lifestyle, like what you declare in your return. Meaning you declare $10,000 of income, but you have a mortgage that, and I'm just oversimplifying. I've never seen a return like this, but I have seen some almost as bad. You declare $10,000 of income, then you declare you've paid interest to a bank on your mortgage of $25,000. So what's the IRS say? Where'd the 15,000 come
Your income's not supporting you.
from?
Yeah,
How
if
did
you're
you
writing
live?
off that, you're
Yeah.
writing off a $20,000 vacation as a business expense. They're
Right.
not gonna like it. Elizabeth Wolf has a question.
Yeah. Go ahead, Elizabeth.
I hope you can hear me. My headset isn't working today.
You sound fine.
Um, I have done, like Tim, I keep track of book sales as income.
Mhm.
But this year I produced a book on Amazon and the proceeds actually go directly into the bank account of a 501c3.
Mhm.
So I get notified when royalties come in, but the money doesn't come to me. It goes directly to them. How is that gonna show up and which of us is going to get the 1099? The person who holds the bank account or the person who
Well, when you say it goes to a 50, you don't get that money, in other words?
I never touch that money. It goes
Okay.
directly into the bank account for the nonprofit that we produce.
So it goes to the nonprofit.
Okay, so it goes to who owns the bank account, not who published the book.
Exactly. And if you had, let's say you did get it. Let's say you did get a 1099 from Amazon. What you could do is you can declare that on, again, you want to declare everything. You declare it on your tax return as received from Amazon. Then down below, farther down the line, you say money transferred to the 501c3, whatever the name is, with their tax ID, and you show it as a minus. So you don't declare the income and it's transferred to them. That's how you would do something like that. So if you get it, don't panic. Just make sure you have the tax ID for the 501c3. That's all.
Yeah, I had all their information to set it up so that the money would go directly to them. So
Yeah. Yeah. So that's how that works.
thank you.
You're welcome. So, so the answer, getting back to Tim's original question, so lifestyle is another issue. You know, in other words, you have to be able to eat, you have to be able to support your family. So if you declare income that's unreasonably low, that's going to be questioned. But those are the two primary reasons. I mean, other than there's people who report people to try to get a bounty, you know, those things. And, you know, you could have, you know, somebody who's tries to come after you that way. That's the third way, but that does not happen too often. It's usually you know, those two, the first two things I spoke about. Now that's inbound. Outbound, because again, this is the perfect time of year to talk about it. Let's say you pay, like Leanne was talking about, if you pay any attorney over $600, and that's also true of anybody else who is either a sole proprietor, like we spoke about, or a single member LLC, which we spoke about. If it's either of those two, and you pay them more than $600, you are supposed to report that to the IRS. So in other words, instead of you receiving a 1099 MISC, you are supposed to give the IRS, you're supposed to report to the IRS, hey, I paid Henry $1,000. Don't have to say what it's for. You just paid $1,000, get my tax ID, and away you go, report it. So now your question is, well, how do I know their tax ID? Before you pay anybody, it's definitely involved in your business, but even things at your home, that's over $600, you ought to get from them what's called a W-9. I think most of you've probably issued W-9s to people. Well, you get that from them. On a W-9, it'll have their name, their tax ID, even if it's a social security number. And there's a box that's checked off on the top. One says individual single member LLC. If they check that box, then if you pay them more than $600, you have to send them a 1099. If it's any of the other boxes, which there's 4 or 5 others, then you do not have to send them a 1099. So, and those are due January 31st. So you say, what happens if I don't do it? If I don't do it, I think the penalty might have gone up, but I think it's $100 for each 1099 you do not issue. So if you didn't issue 10 1099s, it's 1,000. If it's only one, and you say, I don't care, I'll take my chances. And if they catch me, they can charge me $100. That's fine too. I have clients who go both ways. They don't want to deal with the paperwork. But that's just something for you to know.
And that's only related attorneys for your business.
Right.
to
Or
clarify.
now any attorney, getting back to what Leanne was talking about, over $600, again, for your business, you're supposed to report that as well with an attorney. That goes on, I don't want to get too technical here. That goes on a 1099 NEC. Don't ask me why it doesn't go on the 1099 MISC, but an attorney you would put on a 1099 NEC.
Does that include the retainer or just the money, the offset money from the retainer?
If they haven't used the retainer and they haven't sent you a bill, that means that retainer, again, should be not income to them. It should be in a protected escrow account. So therefore, it's not income.
Okay.
But if they've used it or used part of it, that counts. All right. So I guess we get there. That was perfect timing for scheduling this on January 12th, because a lot of clients don't know that. And again, I don't want to make it really overcomplicated to scare anybody. The chances of the IRS turning up, you not sending outbound a 1099 are relatively slim. It would only be in a situation where someone you sent money to got audited and they didn't declare income, and you happen to be one of the people they didn't declare the income, and they'll say, well, let me check with this guy. Oh, he's never done a 1099. Then they would go to you and say, how come you're not doing 1099s? Now, they're not going to drag you in. It'll all be done on a computer. Computer spit out letter that'll say, did you pay Charlie Brown $1,000? And you say yes, and then they'll send you a bill for $100. It's not like you're not going to get raked over the coals on something like that. So that's that. So I think somehow we got diverted to the reporting side, but getting back to other expenses you can deduct on your business, telephones, any commercial insurance, if you have umbrella insurance, anything like that. We started at meals again, meals with anybody related to your business, or any point the IRS code says, any point where the business is discussed. So you go out with your spouse and you and your spouse discuss whether it's worth keeping this book business going or should I get rid of it? Well, if you do that, that's deductible. If you go out to your meal and discuss the kids or other personal things, then you can't deduct it. And again, the question is, how is the IRS going to know that? They're not. So basically, just don't go crazy. Just report, as accurately as you can, whether it's a business meal or not. The other thing is that people always forget, dues and subscriptions. Any dues you pay also are important. Any dues you pay to any kind of organization, Chamber of Commerce, anything. All your subscriptions to magazines usually are, because that, especially in your business, that gives you clues with your books and whatnot. Those are all deductible because, again, it helps you in your business. So that is another area that most clients miss. Another one, and it's not so much it's miss, it's just kind of like overly complicated, and I'm going to editorialize. In my opinion, are auto expenses. Okay, what do I do about my car or my auto expenses? Well, IRS requires you to keep what's called a contemporaneous record of your automobile mileage. So what does that mean? That means you can do it on your phone, you can do it on a calendar, you can do it on a little notebook, just whatever business miles you travel, write down the miles, write down, what the purpose of the meeting was and who it was. And at the end of the year, you add them all up compare it to the total miles the vehicle went, you know, because you're obviously gonna have personal miles unless you could dedicate a car 100%, which that's pretty difficult to do, but not impossible. You deduct the percentage, just like we talked about the home, of the business versus the personal, of all your auto expenses. Insurance, gas, repairs, excise tax, and anything related to the auto. So now we're to the, can we depreciate an auto? Yes, you can. But again, that's probably a little more complicated for this session. It depends. That may be lucrative. It depends on the vehicle. It depends on the type of vehicle. It depends on a million different things. But let's say you don't keep great records and you really don't want to track down all your gas and everything else. The IRS allows you what's called a standard mileage rate. So you go 1,000 miles during 2023. IRS, and I believe it's 67, they split it during the year, but I'm just going to keep it simple. The IRS allows you 67 cents a mile. So if you went 1,000 miles, you get to deduct $670 for automobile expenses. The good news about that, you don't have to tell them the vehicle, you don't have to tell them when you bought it, you don't have to tell them a whole bunch of things. You just say business miles, 67 cents, bang, it goes on your Schedule C as an automobile expense.
All right, two questions. First one's in chat.
Yep.
So author copies, which are reduced copies, can they be deducted as additional expense when any books that you buy from the publisher at whatever
Oh,
cost?
sure. Yep, as long as you use it in your business. And you kind of do, and it's, you know, it's almost impossible for any outside person to say, well, did you use this book in your business or not? It's all in your head.
So, but copies of your own book. In other words, you're getting copies to sell at half price.
Uh-huh.
So you can sell them at full price. Obviously, the income that you're making is the income coming in is the full price. So how
Yep.
much can you deduct of the cost of your copies to sell?
The full cost. Because if it costs you 50 cents and you sold it for $1, then you can deduct, 50 cents, you have to report $1. That's how it works.
All right, so Leanne's hand was up as well.
Just be careful, well, before we leave that subject, and just hold on 1 minute, Leanne.
Mhm.
Understand, depending on the state, we can get into sales taxes. But for Massachusetts, for example, you're supposed to collect sales tax if you sell to the end user. If you sell to a reseller, somebody's going to you sell it to a company for $1, they're going to sell it for $2, then you do not have to collect sales tax. It's only to the end user. And now that's a whole nother area of forms and information. If you sell to a reseller, there's a form they have, it depends on the state and the form number, that basically is a reseller certificate. So you sell this book for $1 and they say, well, I'm a reseller. In order for you not to charge sales tax, they have to send you a form proving that with the state, they're a reseller. It's a very simple little thing. It says ABC Book Distributors is a reseller in the Commonwealth of Massachusetts. Here's their ID. You just take it, put it in a file, and you don't charge them sales tax. If you sell to a nonprofit, there's another form that proves they're a nonprofit. So those aren't taxable for sales tax purposes. So those are the two primary ones that you don't have to collect sales tax. But if you sell to an outright consumer, the end user, you are supposed to collect sales tax. And when you collect that sales tax, the next question is, well, how do I get it to the Commonwealth of Mass? Well, you have to file as a reseller. I mean, you have to go to a website, file as your business to say you collect sales tax, and depending on how much you collect, you have to turn that over to, well, I'm using Massachusetts, the Commonwealth of Massachusetts on either well, it can be as much as weekly, but that won't be the case. It'd be more probably quarterly or annually, you turn that money over. So if at the end of 2023, you collect $110.52 of sales tax, you turn that over before January 20th, it's 20th in Mass. And you're all good. So understand that a sales tax, just so you understand the difference, there's different type of taxes. There's an income tax, which was spoken about up to now, and a sales tax is what's called a trustee tax, meaning the government is having you as a trustee collect sales tax revenue for them. So your obligation is to turn that over to the government. And again, in their eyes, income tax is important, but if you don't turn over a trustee tax, that's not a good thing. So anything you collect in sales tax, you definitely want to turn over.
So is there a place online in your state, like Massachusetts has a place that I can just do it online?
Yep, web file for business, it's called. And it's Mass Tax Connect. It's called Mass Tax Connect Web File for Business. And you just register and understand. The other thing I have to say, and is that you will find, not the IRS, unfortunately now, because they still have less people than they should, but you will find almost, and I'm talking about, and I deal with most every, not every state, but most every state in the country, you will find them very, very cooperative and responsive. If you call and say, how do I register for sales tax, and call the Commonwealth of Mass, they'll be very helpful. They'll walk you right through it. They're very helpful. Because, well, a couple of reasons. Number one is you're basically a source of revenue for the Commonwealth, but also they would rather have you do it the right way than end up with putting it in the wrong bucket and then having to unravel it, because then it's work for them. So they're very, very helpful. So you would call the Department of Revenue. I would go to Mass Tax Connect. There's a number there that tells you, and that's how you would register. You have to file a return. You do the return online. It's not a complicated return. At least, I don't, I haven't had clients complain. Basically, they want to know how much you sold. 100 books for $10 each. So you sold the books for $1,000. You collected $62.52 in sales tax. So that's so now I'm going to remit $62.50. Away we go. That's the return you file. And again, depending on the amount you collect, it's quarterly or annually. I would say, it's probably annually. They will let you know if you collect too much in one year, and they'll have you file quarterly. They will let you know, and until then, you can only have to file annually. So you would, so again, what am I saying here? So let's talk about revenue. You would declare that, like Elizabeth talked about before, let's say, gee, that's going to be more income. Not really, because you'll show the revenue coming in on the sales tax, but you'll be able to deduct the sales tax expense you paid. So it zeroes out. Every state's different. I don't know how many out-of-state people we're dealing with. There's 50 states with 50 different sets of rules. Some states don't tax books. Depends on the state.
Leanne's question.
Yeah, a couple things. Have they already enacted the Venmo $600 where we have to declare?
Oh, yeah.
Can you explain, is it $600 in total or for the year?
600 in total.
So anything.
They will send that to you.
Venmo, yeah, I just saw that.
Yeah.
And now are they going to do the same thing for Zelle and Cash App?
Yep, all of them.
And
Okay.
Venmo is not responsible for paying the sales, for collecting the sales tax. You
Yeah,
have to
not the
do that
sales
out-
tax.
Okay.
Yeah. Yeah, not
No,
sales.
because you just put in. And then my other thing is to qualify as a business expense in travel. What's the minimum? I just have to make a meeting with somebody. Can I call them from the hotel? Can I have a Zoom call?
Yeah, anything.
And that just
Yeah.
qualifies it as business travel?
Yeah.
Okay.
Again, now if you go with your spouse and you go with your kids, and you know, obviously you just deduct your portion. And if you call the five, you're on this call for an hour, but otherwise it was personal, that's kind of shaky, but you can deduct some of it. It's all kind of like I said, there's black, white, and gray. On expenses, you go with the gray. Anything, you had another question, I think, Leanne, you said you had two.
No, but I'll just start in here. So I know that my divorce lawyers, apparently that's not,
They're
there's
not
certain lawyers that aren't,
deductible,
right?
don't ask.
Right?
Right,
Except for my divorce, like, and I'm sure a lot of people's had to do with my business, and dissolving the business and stuff like that. But I know it's like a gray area. Is there any other law that isn't? I mean, I don't know my criminal attorney, going in and out of jail.
well, first of all, it depends how the attorney bills you. If it has to do with let's just talk about, again, I don't know the exact situation. If the attorney spent, 90% of his or her time on the divorce, but spent 10% on your business, the attorney should send you two bills. One to you personally for the divorce, and one for the business. Again, another reason why you want to set up an LLC and have a separate bank account, which Tim mentioned, and one for the business.
Gotcha.
And what that number is, I don't, depends on how the attorney, actually sends the bill. So that's the way you get to deduct the legal bills.
Hmm.
And there really aren't, trying to say, really aren't any other, depends on the type of service the attorney provides. A lot of them are not deductible, but again, it depends on the situation. It depends, it's almost like with the sales tax. It depends on a specific situation, whether the attorney fees can offset the money you receive. It depends on the type. If it's a recovery of an expense, you can. If it's some kind of emotional issue, I don't think you can. If it's payroll, you can't. If it's a recovery of lost wages, there's all different rules depending on what it is.
I have a question, Henry.
Yes.
First of all, coaching services are not taxed, correct?
I don't know. What do you mean?
If I have a client
Mm-hmm.
that is giving me money for an hour of service,
Mm-hmm.
that's not taxable, that's just income? Does that,
Yeah, it's taxable as income. Yes, it is. It's
in
income.
terms of sales tax, you don't
Oh,
put
sales tax,
on
no.
coaching
It
services.
depends on the state, but Massachusetts doesn't tax services.
Okay, I don't think New York does either.
I don't think New York does either. I'm pretty
So I gotta figure out how to get my money back.
It depends, but it depends on the state and it depends on a specific service.
Okay,
Anything like that, again, you can, you got two choices. You can contact your CPA, or you can even yourself, you contact the state and say, this is what I do. I do coaching, blah, 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 blah. Is this taxable? And they'll tell you. I
okay,
mean, they're not getting a commission on whether it's taxable or not. They will tell you what the law is.
all right.
That's what you go by. All this is available online too, but I'm sure all of you have better things to do with your time than look
Yeah.
online to figure it out. So
Yes.
you don't want my job, but
In
that's
terms of, I'm sorry, so in terms of Amazon, Ingram Spark, when we are buying our own books, If we supply them with our seller ID,
Yeah,
they will not tax us?
okay, because you're a reseller.
Correct.
That's why.
Okay.
That's what, see, when I said that before, when you give them that tax ID, you're registering as a reseller, so they don't have to collect the sales tax. But you do if you're selling to the ultimate, depends. If you're
Yes.
selling to the
Yeah.
ultimate consumer, if you sell it to me, then you're supposed to collect sales tax. If you sell it to someone on eBay who's going to resell it, then the same as your situation. Give me your tax ID, your reseller certificate, then you don't have to collect sales tax. Because you're not the end, you're not the seller to the end user.
So if we paid sales tax to Amazon,
Mhm.
how do you get that back? How do you redo the?
With Amazon, good luck.
So in terms of our taxes,
You can deduct it, but I would say with the case of Amazon, you want to make sure that effective, I'm a reseller. I don't want to pay sales tax, and you file what necessary paperwork, and you can stop it, from this point on. Collecting it on the way back, I can hear the excuses already. Well, we already turned it over. We already did this. So you have to go to the state and get it from them. That does, it's not much hope. Because that's what they're going to say. They're going to say, we return it over to the state.
so in terms of our filing though, we can put that as an expense, right? We
Yep.
can. Thank you.
Yep, you're welcome.
We've got about 10 more minutes, and we can wrap up. And Henry, you just open for, are we just doing questions now, or do you have anything else to add for us?
Well, if anybody sees an area that I missed, I mean, I would be glad to add, to discuss it. I mean, the areas, the easy part kind of is the income, the expense side is, I did the highlights of some of them. There may be others that I've missed. So if anybody has any questions on anything else in that area, I'd be glad to answer.
Do you have a recommendation of the types of banking accounts we should keep in our business to try to help keep things straight?
Well, again, this is let's say you set up an LLC. If you set up an LLC, you basically have to set the bank account up in the name of the LLC, which will be a business checking account. Depends on the bank. Some banks are very difficult to deal with. They want to charge fees on business checking accounts. Others do not. Usually the smaller the bank, the better off you are with business checking because they don't charge. The large banks, the Bank of Americas, the JP Morgans, those things, they will charge you for a business bank account. But you can always do a small one. Credit unions are a good source. Savings banks are a good source because they basically want your money, and versus a big bank, which is kind of like, in a big bank, you're a small fish in a big pond. They kind of like, it really costs us more money to administer this small little business account than it's worth. So they kind of like charge you fees. A smaller bank, they would be more helpful. Just keep going until you find one, and you will.
I have one. I just
Oh,
wanted to.
good.
If
That'll
it
work. Credit unions, and again, this isn't what the discussion is today. Credit unions in general are probably the most overlooked source of banking for most people, in that for whatever reason, you just don't, use them or remember them, but they usually are the best on fees. They're the best on interest rates, in and out, paying out to you and paying, or you have to pay them, whether it be an auto loan or a home mortgage or any of those type things. And, they're nonprofit. That's one reason. They don't pay taxes. So,
Are they federally insured?
yes. Yep. Each one is different. So you just ask. And most of them are. Everyone I've seen is. Same as a regular large bank. If they're
So
not,
anyone-
I'm worried.
Anyone on this call whose head has exploded in the past hour?
I hope I didn't scare anybody.
No, it's very useful information for us. I know that I picked up some things in this course of this hour that I can do, and especially that I haven't done. So, you know, thank you very much, Henry. Unless someone else has some other questions. Henry, can people contact you if they think of a question later on? I'm
Sure.
sure not to stalk or harass you, but to.
No, that's fine.
input.
Yep, I'll give you my cell phone number. It's 774-559-9799.
And I put that in the chat.
Okay.
Wait, 9799, is that correct?
Yes, sir. There's a bunch of nines. I didn't pick the number.
All right. Thank you so much for your time and your information. That was really, really great. And it was
Okay.
very generous of you to come on.
And if you need anything else, please feel free to contact me.
All right.
Thank you so much.
Have a good weekend, everyone.
You too.
Thank you, thank you. Thanks, guys.
You're welcome. Enjoy.
You too.
Bye-bye.
Bye. That was good.
Yeah, that was really good.
Did you stop the recording? Not yet.